Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 18, 2023. Bonds extend gains as rate hike speculation eases. Bonds continue to make gains for the second consecutive day, as traders speculated that global central banks may be reaching the end of their aggressive rate hikes. European equities, which suffered losses earlier this week, found firmer ground on Tuesday. The Stoxx 600 index saw a modest gain, led by the healthcare and financial services sectors. In the Eurozone, Italian bonds also experienced a rally. Hope for inflation reprieve as focus shifts to reports. There is hope for a potential reprieve in inflation, with attention turning to reports from the Eurozone and the UK on Wednesday. If consumer price pressures ease, it could signal a shift for central banks away from their tightening policies. These policies have resulted in the fastest pace of interest rate hikes in 4 decades. Recent data revealed that U.S. price pressures cooled more than anticipated by economists, further fueling this hope. Visco's optimism on inflation. Ignazio Visco, a member of the European Central Bank's Governing Council, mentioned during an interview that inflation might decrease more quickly as lower commodity prices make their way into the economy. While the ECB projects a 2% inflation rate by the end of 2025, Visco believes it could happen even faster. U.S. futures stabilize ahead of bank earnings. In the U.S., futures have stabilized as investors eagerly await bank earnings. However, Bloomberg intelligence suggests that early optimism may be tempered by potentially downbeat results from Morgan Stanley and Bank of America Corporation. These results are due before the U.S. trading session opens. Later on Tuesday, market participants will also be closely monitoring U.S. retail sales data for insights into consumer health. Economist median forecast indicates that spending will remain robust. Yellen expresses optimism on inflation and job market. Treasury Secretary Janet Yellen expressed optimism, stating that the nation is on a good path to reduce inflation without significant harm to the job market. As the Federal Reserve nears the end of its rate hike cycle, there may be a growing interest in longer-term bonds as a potential investment, according to BMO capital markets strategist Ian Lingen. Asian stocks decline on China's sluggish economic recovery. Asian stocks faced a decline as China's sluggish economic recovery prompted major banks to downgrade their growth projections for this year to 5%. JP Morgan Chase & Company, Morgan Stanley, and Citigroup Incorporated were among the banks revising their forecasts, putting Beijing's official gross domestic product target of 5% at risk. Hong Kong shares were particularly affected, emerging as the worst performers in the region. Oil prices halt decline, gold edges higher. Oil prices halted a 2-day decline due to concerns over China's economy, as Russia announced plans to reduce its crude oil exports. Gold prices also edged higher amidst the market fluctuations, benefiting from falling U.S. Treasury yields. Cautious optimism in U.S. markets. Investors in the U.S. were cautiously optimistic as major indexes experienced slight gains. The Dow Jones Industrial Average reached its highest close this year, advancing by 0.22%. The S&P 500 saw a gain of 0.39%, while the Nasdaq Composite climbed 0.93%. However, trading volume was lower than average, likely due to anticipation of major companies releasing their earnings reports. Earnings projections and outlook. As earnings reports are unveiled, it's crucial to focus not only on companies' past quarter figures but also on their projections for the remainder of the year. These projections may provide signs of hope for continued economic growth. Analysts predict that second quarter S&P 500 earnings will be more than 7% lower compared to the same period last year. Currency market outlook. Major currency pairs are struggling to establish a clear direction early on Tuesday. The US dollar index continues to trade below the key level of 100.00, influenced by a decline in the benchmark 10-year US Treasury bond yield. Market expectations for US retail sales in June are for a 0.5% increase, which could provide some relief for the US dollar. Reserve Bank of Australia considers further tightening. The Reserve Bank of Australia's July monetary policy meeting minutes revealed that policymakers agreed on the potential need for further tightening and would reassess the possibility of a rate hike at the August meeting. The Australian dollar to US dollar pair showed some strength during the Asian session but struggled to maintain momentum. Before continuing with our analysis, we would like to remind you of your support for our channel market briefing analysis of today's financial news. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This combined with your comments helps us grow and offer you even more quality content. Now let's get back to financial market news and the latest updates. Euro to US dollar reaches highest level since February 2022. Euro to US dollar reached its highest level since February 2022, touching 1.1276 early on Tuesday before retracing to the 1.1250 area. Pound sterling to US dollar remains in narrow channel. Pound sterling to US dollar experienced minor losses on Monday but managed to shake off bearish pressure. It is currently moving sideways within a narrow channel below 1.3100. Inflation data awaited in Canada. In Canada, the Consumer Price Index, CPI, for June is expected to show a slight decrease to 3.5% on a yearly basis, compared to 3.7% in May. US dollar to Canadian dollar remains in a consolidation phase around 1.3200 as market participants await the release of key inflation data. Other market updates. US dollar to Japanese yen faced renewed selling pressure after Monday's recovery attempt and is currently trading in negative territory near 138.00. Gold is benefiting from falling US Treasury yields early on Tuesday and is trading at its highest level in a month, above $1,960. Cryptocurrency market. In the cryptocurrency market, Bitcoin continues to face downward pressure and is trading below $30,000. Ethereum also closed in negative territory for the fourth consecutive day on Monday, losing nearly 1% and hovering just below $1,900. Key events this week: U.S. retail sales, industrial production, business inventories, cross-border investment, Tuesday. Eurozone, UK CPI, Wednesday. U.S. housing starts, Wednesday. China loan prime rates, Thursday. U.S. initial jobless claims, existing home sales, conference. Board leading index, Thursday. Japan CPI, Friday. Some of the main moves in markets. Stocks. The Stoxx Europe 600 was little changed as of 8:32 a.m. London time. S&P 500 futures were little changed. Nasdaq 100 futures were little changed. Futures on the Dow Jones Industrial Average were little changed. The MSCI Asia Pacific Index was little changed. The MSCI Emerging Markets Index fell 0.5%. Currencies. The Bloomberg Dollar Spot Index fell 0.2%. The Euro rose 0.3% to $1.1275. The Japanese yen rose 0.3% to 138.30 per dollar. The offshore yuan was little changed at 7.1777 per dollar. The British pound rose 0.3% to $1.3106. Cryptocurrencies. Bitcoin rose 0.3% to $30,012.71. Ether rose 0.6% to $1,901.22. Bonds. The yield on 10-year treasuries declined 4 basis points to 3.77%. Germany's 10-year yield declined 3 basis points to 2.45%. Britain's 10-year yield declined 4 basis points to 4.39%. Commodities. Brent crude fell 0.2% to $78.33 a barrel. Spot gold rose 0.5% to $1,964.06 an ounce. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.